What's up, everybody? This should be a quick and easy lesson for you guys since I only provide this class to people in the chat, right? Pretty much. And we do this on a regular basis. Almost every day, we use volume incorporated into our trading. Okay? So, first to start off, what is volume? Volume is the amount of shares exchanged during that period of time that you have enabled on that candle, right? So, for this example, I wanted to use this chart to show you, the volume. We have the 2 year 1 day chart. So 1 day represents the candle. Each candle represents 1 day. Okay. And this is in a 2 year time frame. So if you notice, we have before COVID and we have after COVID or during COVID, since right now COVID is still a big thing for the markets. And I wanted to show you because I wanted to show you guys a quick thing. And I think that this kind of example will serve as a better, demonstration of how volume is so important and plays a big role into your trading. All right. So over here we have before pre-COVID, right? Pre-COVID, we had this amount of volume. If you notice, the average volume was probably, I'd say, right around here. All right, that was the average amount of volume, I'd say. When we got the COVID news that the United States was shutting down, airline travels were shutting down, whatever, we had a big spike in this volume. It was obviously way more above the average amount of volume. Okay. But what did you notice? Do you notice anything different when the amount of volume came in? The bigger the move happened when the amount of volume came in. So when there's higher amounts of volume, the bigger the move was. Why? Because volume represents the amount of shares exchanged during that period of time. Okay? So if there's more shares exchanged, which buying or selling, right? And obviously during COVID, it was more selling, more sellers volume, right? So it pushed down way more dramatically. There was bigger moves. We've seen days during the start of the COVID crisis. We've seen days being down $30, $20, $15. We've seen dramatic up days being up $15 or $10. All right. Now we're seeing a little bit decline in that kind of pressure because the volume is slowing down, right? The volume has gone down significantly. So now every day we're seeing maybe a $4 move, $5 move. But granted, that is still a big move for SPY. Down days are probably only like $3 to $4, sometimes $2. Usually I've seen a lot of times it goes down $5, reverses like half of it throughout the day. But yeah, that's why volume is very important, because if the volume increases, okay, on a stock, the chances of that stock moving in a more aggressive manner is higher, okay? More volume equals more volatility. More volatility is when a stock can change price very quickly, very dramatically, and very in a very short amount of period of time, very unexpectedly. All right, so it can move up a lot or down a lot very unexpectedly. And how you watch that is by looking at volume. Okay, so kind of to get into a little bit more detail of volume and how to incorporate it into your day trading, we're going to look at this SPY chart, the SPY 1 day 1 minute. This 1 day 1 minute chart represents the whole day, Friday, January 15th, and the 1 minute represents 1 minute. Each candle represents 1 minute of trading. Okay, so let's zoom in right here. Now we're gonna see that we in the morning had a little bit of volume right here, right where my cursor is, trading a little amount of trading volume. Now at some point in the day, that volume obviously kicked in, and look what happened. The move was huge. That's what I'm saying. The more volume, the more volatility. And when there's more volatility, there's larger moves in the market. All right. And this could benefit you specifically because if there's a larger move, you could get in and out of something quicker than if something were to have no volume or just keep having the same amount of volume, right? You usually see a spike in volume when there's news, bad news, good news, or when there's something that we're in now, right, where we're in a very uncertain market environment. You're going to start seeing more bigger moves. This is why it's so great to trade in this market environment, because you can get in and out very quickly. All right. So we see here that we drew a support, an intraday support. We'll use this as support. We'll use the candle's closes as the support. It broke support. Bam, right there. Next candle. They noticed it broke support, so people started coming and rushing out because it broke support, and the volume, and you notice the volume come in, and the moves on these candles are greater than the moves on these where there's just little bits of volume. You see the difference in the candles? Let me zoom in. Let's take this volume, right? This candle, for example. We have this candle filled with seller's pressure with this amount of volume. Then if we go over here, we see a bigger red candle with a larger amount of volume, because the more amount of volume equals more volatility, and more volatility doesn't have to equal a bigger price move. All right, so basically, when a stock breaks resistance or support, you want to see the volume typically go up or down. Up. You want to see the volume of that level going up. Okay, if the volume is going up, that means there's either a lot of demand or a lot of resistance at that level, and there could be a big move coming as a result of that. Because if there's more selling pressure at a support, people might start seeing that it's not, holding up that well, and they might start coming in themselves to sell. That puts more people in the market, right? That creates more sellers, which creates a bigger move and allows you to profit if you play it smartly. Now, this doesn't mean that you have to use volume in all of your trading. This is just kind of like an extra backup when a stock does break resistance and support, okay? But again, you don't have to use it even if a stock breaks resistance and support. You could pretty much kind of tell already that the volume is great just by looking at the candles, because slower moving candles or less aggressive candles typically mean that there's just the same amount of volume, okay? That's pretty much it. That pretty much wraps up what volume is. If you guys found this useful, you guys could complete the quiz that's at the end. If you guys did not find this useful, please message me and tell me what you don't understand when it comes to volume. All right, there will be a quiz on this. Hope you pass. Otherwise, good luck trading next week, guys.